The Kisan Credit Card Scheme was introduced by Government of India in August 1998 with the aim to provide credit to farmers on the basis of their land holdings so that the farmers may use them to purchase agricultural inputs such as seeds, fertilizers, pesticides, etc., and also draw cash for their production needs. The scheme was further extended for allied and non-farm activities in the year 2004. The scheme was further revisited in 2012 to simplify the scheme and facilitate issue of electronic Kisan credit cards. It's a pioneer credit delivery innovation for providing adequate and timely credit to farmers under single window. The scheme provides broad guidelines to banks for operationalizing the KCC scheme. Implementing banks will have the discretion to adopt the same to suit institution or location specific requirements. Kisan Credit Card is a credit card to provide affordable credit for farmers in India. Applicability of the KCC scheme. It is implemented through commercial banks like J&K Bank, State Bank of India, Punjab National Bank, Oriental Bank of Commerce, Allahabad Bank, etc. It is also implemented through regional rural banks, small finance banks, and cooperatives. Objective or purpose of the Kisan Credit Card Scheme. The Kisan Credit Card Scheme aims at providing adequate and timely credit support from the banking system under a single window with flexible and simplified procedure to the farmers for their cultivation and other needs. It's been done in two ways. Number one, through short term credit limit, and secondly, long term credit limit. In case of short term credit limit, to meet the short term credit requirements for cultivation of crops, post harvest expenses, produce marketing loan, consumption requirements of farmer household, working capital for maintenance of farm assets and activities allied to agriculture. Whereas in long term credit limit, investment credit requirement for agriculture and allied activities. Eligibility for the Kisan Credit Card Scheme. The farmers, individual or joint borrowers who are owner cultivators, tenant farmers, oral lessees, sharecroppers, self help groups, joint liability groups of farmers, including tenant farmers, sharecroppers, etc., are eligible for the Kisan Credit Card Scheme. Joint liability groups. These are informal groups comprising 4 to 10 individuals. It is for the purpose of availing bank loan against mutual guarantee. Joint liability group members engage in similar type of economic activities either in farm or non-farm sector. There is simple management with little or no financial administration within the group. Criteria for selection of joint liability group members. Members should be of similar socio-economic status background and carrying out same economic activity. The members should be from the same village, area, or neighborhood and trust each other. Members defaulting to any other former financial institution in the past are debarred to be member of the group. Joint liability group models. There are two models. In Model 1, financing individuals in the group. All members to execute one inter-se document making each one jointly and severally liable for repayment. This mutual agreement and consensus among members on the quantum of loan. And Model B, the financing the groups. Joint liability group to function as one borrowing unit. Joint liability group is eligible for acquiring one loan. If the member want to save, saving bank account can be opened in the name of the joint liability group. All members to execute one inter-se document making each one jointly and severally liable for repayment. Loan limit under Kisan Credit Card Scheme. There is a provision of maximum loan up to rupees 50,000 per individual under both Model A and Model B. Scale of finance. The scale of finance for each crop will be fixed by district level technical committee. Renewal. The Kisan Credit Card is valid for a period of 5 years subject to an annual review. Insurance. The two type of insurance. Firstly, the personal accidental insurance scheme against accidental death and permanent disability up to maximum amount of rupees 50,000 and rupees 25,000 respectively. The premium burden will be shared by the bank and the borrower in the ratio of 2:1. And secondly, crop insurance. Documents. The necessary documents for address proof can be a self-attested copy of a voter ID card or Aadhaar card or ration card or electricity bill or telephone bill or the state subject. For identity proof, the self-attested copy of either voter ID card or Aadhaar card or driving license or passport or employer's identity card. In case of self-help groups or joint liability groups, documentary proof regarding formation of self-help group or joint liability group must be obtained. Land holding proofs. For loans up to rupees 1 lakh, no revenue record or revenue paper is required. In such cases, an affidavit from the borrower declaring the cultivated land holding on oath duly attested by executive magistrate to be obtained. For loans above rupees 1 lakh and up to rupees 3 lakhs, revenue record duly attested by Patwari or competent officer of Revenue Department shall be submitted. And for loans requests above rupees 3 lakhs, Proper revenue records duly attested by the competent officer of Revenue Department shall be submitted with the application. Security. For limits up to rupees 1 lakh, there's no security. For limits above rupees 1 lakh and up to rupees 3 lakhs, there is a third party guarantee of one or two persons having sufficient means to withstand the liability. For limits above rupees 3 lakhs, the mortgage of immovable property or agriculture or horticulture land with a minimum market value equivalent to at least 125% of the sanctioned credit facility. Rate of interest. Interest on KCC limit up to rupees 3 lakhs will be charged at 7% per annum as per directives of Government of India. Interest subvention is available from Government of India, otherwise it will be charged as per bank's norms.